This is the Flipping Junkie podcast, episode 15. Welcome to the Flipping Junkie podcast. My name is Danny Johnson, former software developer turned house flipper, flipping hundreds of houses. Each week, we bring you interviews, strategies, stories, and motivation to help you get started flipping houses and on your way to becoming your own boss and achieving financial freedom. Thanks for spending time with me today. Now let's get to it. Today's guest is Jason Bible. Jason got his first taste of real estate investing after joining a local real estate club, and in 2012, he made his first transaction and hasn't looked back. Jason founded Houston House Buyers in July of 2013, and in its first year produced over $3 million of gross revenue through wholesaling, leasing, and flipping 70 houses. Houston House Buyers is expected to buy 100 houses in 2015 and produce nearly $6 million in gross revenue. That just goes to show you that Jason really knows what he's doing, and he's done a lot very quickly as he got started in this business. In this episode, we're going to talk a lot about what a lot of you are probably struggling with out there that are still sitting on the sidelines, waiting and wanting to get started flipping houses and be a part of real estate investing. Usually the major thing holding a lot of people back is where they're going to get funding to do deals. You know, it costs a lot of money to buy houses and fix them up, and a lot of people just don't have that money. I didn't have that money when I started. Jason didn't either. And what we talk about in this episode is we cover how to get started by using hard money loans from hard money lenders to get started with, to gain some experience, and then move into private lenders. We're going to show you how to find private lenders, how to work with them. And then also we get into talking about small local banks, which is usually the next progression. And in this episode, he really shares this awesome tip. I love this tip on how to find the small local banks that some of the hard money lenders are using, and even who exactly to speak with at that small local bank. It's an awesome tip. I'm glad he shared it with us. I'm going to try to put it to work myself. And then we also cover what to be careful of whenever you solicit loans from private lenders. You've got to watch out for things regarding SEC guidelines and all that kind of stuff. So check out the episode. You're really going to love it. And then I've also got a download, a quick guide on finding and approaching private lenders that you can get on the show notes page. And that's at FlippingJunkie.com/15. So the show notes and that guide that you can download, the guide that you can download is at FlippingJunkie.com/15. Enjoy the episode. Hey Jason, how you doing?
I'm doing good.
Hey, thanks for being on the show.
Well, it's great. I'm always willing to help out, and your website's been invaluable to me for the last few years. So I thought it'd be great to see if I can get on the show and share some of the things that I've learned.
Hey man, I really appreciate that. Hey, let's jump in and find out a little bit more about you and how and why you got started flipping houses, just so people have a little bit more of the backstory of what you got fired up and excited about this business.
Okay. Well, I started. I previously had a fantastic career in risk management and health and safety, and I was working on my MBA in finance back in 2008. I graduated in December 2009, and I started looking for a job. And if you remember the 2008-2009 era, it was kind of hectic in the world of high finance. You know, everyone thought the world was going to end, and it was not the perfect time for a career change. So
Oh yeah.
I went and interviewed with a whole bunch of different companies, firms, funds. I mean, I really did the interview gauntlet. And the prevailing thought back then was, hey, you're great, but we really don't know what the world holds for us in the next 6 months or a year. But you're free. We'd love to talk to you, 2 years from now. And I thought, well, that's kind of ridiculous. So I was still working full time as a risk manager. And I had always wondered how to get into real estate, and not real estate, as building, a REIT or anything like that, but how to mom and pop do it. And so I joined a local real estate club here in Houston in I believe it was December 2010, and joined this group between Christmas and New Year's. So that week there, week and a half, that's kind of dead time for most people. So I was going to real estate classes during that break between Christmas and New Year's, and I signed up for a small mentoring program here at a real estate club in Houston. And then from there, took probably 6 weeks before I bought my first house, and it was a rental property. And then I searched and searched and searched and really couldn't find anything for about 2 months. And then, as luck would have it, when my wife went out of town, I bought two houses that day, one right around lunchtime and one in the evening. And then eventually we had bought a fourth house that same year. So we were testing a couple of different things out. We were using a landlord model, where we were buying, fixing up, and then renting it out. And then we had two properties we ended up flipping. So, and those were a lesson in themselves. One property we broke even on, and another one we made about $2,500 on. So not exactly the best business model, but as you know, on some of these things, you kind of your tuition is learning sometimes. So
Right.
So sometimes you're not going to make a lot of money, but you learn something, you apply to the next one. So that was in 2010. And then 2011, I spent, or actually it was 2011. So 2012, I spent most of the year writing offers. I was probably writing, 15 to 20 offers a week. It was absurd. And the houses that I was getting under contract, at the end of the day, the numbers really never made sense. So I joined a mastermind group here in Houston with 4 or 5 of us. It wasn't a real big group. And really, I was looking for folks who are taking single family real estate to the next level. I mean, there's a lot of mastermind groups out there for commercial and multifamily and small office and all that stuff. But for single family, there's really not. I mean, single family movers and shakers, not the guy that buys a house a month. I mean, really folks who are doing a lot of volume. So we put together this little group, and one of the folks I had met in this group is now my current business partner. And one day we were chatting over lunch, and he said, "Hey, if you were to start a real estate company, what would it look like?" And so put together a little one-page business plan and a pro forma in Excel, nothing real fancy or sexy, and said, "Hey, I think this is what we can do, and I think this would be the vision and the strategy around it." And he said, "I think this might work." And so we kind of sat down and worked out the rest of the details, and said, I think this is something that would be pretty cool. So July 2013. Actually, I left my job July 4th. How ironic is that? That was my last day of work. Well, I guess July 3rd was my last day of work. And then I did what any good entrepreneur did, and I went on a family vacation for a week that
Nice.
we had already scheduled. And then that following week, we actually started. So we started July of 2013, and we did like 6 or 7 houses that first 6 months. And anybody, at least that I've talked to in business, it takes about 6 or 7 months to kind of get things going. Your marketing's kind of rolling, getting deals under contract, you're meeting with sellers. And it takes, our sales cycle is typically 3 to 6 months. So, the follow-up is important, but most people aren't ready to make a decision the first time you meet with them. So we did 6 or 7 houses that first 6 months, and then we knew we were going to start growing, and we had somebody really special approach us January 15th of 2014, and we brought him on board as our first employee. And that first year, we bought about 67 houses.
Wow.
And this year, we're on pace to buy just under 100. I think we're going to land somewhere between 92 and 96 for the year. So that's kind of how we started. And one of the reasons for our quick growth is we put a lot of money right back into marketing for expansion. So, although our balance sheet and income statement look great, we just really pour a lot of that stuff right back into marketing just so that we can keep growing. So, for us, we really just reinvested all of our revenue really right back into growing the business, into our marketing.
Yeah, that's a great way to do it. I know a lot of people do a deal, make some money, and then go out and sort of blow it, have a lot of fun with it. And it's like, it's kind of hard, but really to put it back into the business and grow and compound it is just an awesome way to grow really fast. So I was wondering though, I mean, sounds like you guys picked it up pretty quick though and started rolling along with quite a few deals. So how were you able to to fund all of these deals? Did you guys have like a lot of money to work with that you could buy these houses with, and how did you fund all of it?
Well, we started Houston House Buyers with 40,000 bucks. My partner put 20 grand in, I put 20 grand in, and really all that money was for marketing. So, $40,000 for marketing plus buying houses really doesn't go anywhere, right?
Mm-hmm.
So, um, what we did is approached private money lenders very early on. In fact, our first, I think, three deals we actually used hard money for. And that was, I mean, working with hard money lenders is fantastic. And I recommend anybody who's new in this business, first couple of deals, you need to work with a hard money lender. The hard money lenders I've worked with are great because they're really not going to let you lose. I've seen some investors that'll bring private money in too early, and they're really not, they really don't have the experience, to evaluate a deal and to, go through the process of flipping a house, managing contractors, all that stuff. And it can really hurt them. And so my recommendation is always, start out with do a couple of hard money loans so that you know what you're doing, and then you can start bringing on private money. But yeah, our first couple of deals were hard money loans.
And how did you find those hard money lenders and know that they were the ones that you wanted to work with? What was the process of finding and evaluating the hard money lenders to go with? Did you have a deal first also?
No, I just had conversations with them first. How I found them, there are a whole bunch of RIAs here in Houston, ton of real estate clubs, uh, and really I distilled the list down of who to work with based on how big they were. If they were one of the top three or four in terms of volume, private money lenders in the city, then I knew they had a pretty good appetite for doing deals. There's a lot of hard money lenders out there that'll do two, three, four deals a month, and those really aren't the guys you want to work with. You want to work with the guy or gal that's doing 20 and 30 loans a month. They see a lot of deals, they know a lot of investors, they know the neighborhoods better than you will, and that's how I evaluated them. Who is, and the other issue too is you want to find a hard money lender that's got enough money. And there's a prevailing thought out there that hard money lenders have all this money, and they really don't. you
Mm-hmm.
know, it's a mix of how a hard money lender works. It's a mix of private money that they've raised and bank financing. So, and in some cases, they have some institutional money. I know some guys here have got some hedge funds that are backing them up now. But you want to make sure that they've got the loan volume to add you to their client list and do those deals. So that was really what I was looking for when I was evaluating hard money lenders. And uh, maybe the other criteria I was looking at was, are they investors as well? There's some hard money lenders that are just lenders, and there's hard money lenders that also invest in real estate as well. So we have a couple of those here in Houston. In fact, the largest hard money lenders are also investors. They own, a national franchise, as part of let's say they're a Home Investors franchise or somebody else, or they just run their own shop where they're doing two, three, four deals a month. So when I'm looking for a hard money lender, that's what I'm looking for. Somebody that's active in the business and is doing a lot of volume.
Yeah, great tip. Yeah, especially if you don't have a lot of experience or have done a lot, so you can learn a lot from them because they're actually doing the business as well and not just learning from it secondhand from other people that they've lent to.
hmm
But what kind of, I know there are some hard money lenders out there that just charge a fortune for the money, and that's why it's called hard money. But what type of terms for these loans were you getting?
It was typically 3 points and 13%. I think we did one at like 3 and 14%. It's not, and I don't think those terms are all that bad. I mean, it
Mm-mm.
sounds like highway robbery, but when you consider uh, there really aren't that many financing options for uh, for these type of assets, it's not really that bad at the end of the day.
Yeah.
What I found is that people that complain about private money being too expensive, it's usually because their deals are already too thin.
Mm-hmm.
So that's an issue. Or a private money lender will not agree with their comps, and they want them to bring more money to the table. It's usually a combination of the two. So I don't, hard money. If hard money kills the deal, it's probably never a deal to begin with.
Yeah,
But
absolutely.
yeah, typical 3 and 13, 3 and 14.
Yeah, see,
Those
that's not that bad because I find, there's a lot of people charging 15, 16%, 3 to 4 points. So it's all over the board. So definitely, if for the people listening, if you go and talk to some hard money lenders and they're telling you 18%, 5 points, 6 month term, that kind of thing, start talking to other people because you're going to find better out there. Now, what
Well, I'll
kind?
tell you what the killer is, and I've been to a couple of national conferences now with that have a focus just on hard money because we have some interest in possibly getting into hard money in the future. And what's amazing to me is, and this is in particular to the California folks and some of those other types of markets, where not only does the hard money lender want 3 or 4 points or 5 points and 14 or 15%, but they also want you to put 20% down regardless of how deep you buy the deal. And I think that is just absolutely absurd.
Right.
So
They
when I
want
see a
skin.
lot
They
of
want skin in the game. I guess. Do you know if
yeah,
that's just for new people, or if that's just for everybody in general?
in talking to these lenders, that's for everybody. And I'm like, you've got to be kidding me. You can go to your bank. If you've got some pretty decent credit and a good job, start working with a local bank. And a local bank will actually fund these things.
Yeah.
We're working with one now that we've got a line of credit with, and we're working with a second. And we've actually, to investors that we've wholesaled to, we've referred them over to our bank, and our bank has set up little lines of credit. They'll do 20% down on a cost and repair basis, and they'll include repairs in that. And that's 1.25% plus prime. I mean, it's
Yeah.
insanely cheap money. So
Well, what I think a question that some people might have in their heads when you talk, because that's something that isn't talked about a whole lot is small local banks. What kinds of things do those small local banks require to do these loans? Like, are they going to slow you down for buying the houses?
no, I mean our banks can close in 5 days, and typically the challenge we've got with the local bank is the backlog for appraisals. So we've got so much real estate activity going on down here in Houston that appraisers are having problems getting out. They've just got so much business; they're having problems getting out there and look at the property. So our bank could literally fund and close a deal like within 48 hours if they could get an appraisal back fast enough. But yeah, the bank, if you're working with local banks who work with other investors, here I'll give you a perfect tip for this. Find out who your top 5 hard money lenders are in your market, and then this is a perfect time of year to go by their offices, because typically most hard money lenders have a bank that's financing them on the back end. So what I would do is I'd go to the hard money lender's office around the holidays and just look and see where they keep their Christmas cards. Usually it's up front somewhere by the receptionist desk, and then just start flipping through and figuring out which banks are funding those hard money lenders.
Wow, that's an
Uh,
incredible idea.
I absolutely love it. I figured it out one day and I thought, oh, well, look at this. Here's Joe Blow from Enterprise Bank, and then
Yeah.
it's got the guy's name on it, right? So
Yeah, and you find out directly who you need to talk to because they've already there's no convincing them. It's like they're already aware of like how lucrative it can be to lend on those types of deals. So that's awesome. That's a great
yeah,
idea.
I mean that's and it's and we can probably segue this into talking about private money. I mean that's how I raise private money. I don't go out there and try and convince mom and pop 401k corporate job person to
Right.
then start investing in real estate. I go find other real estate investors that have self-directed IRAs or have already done loans before. I mean that's the easiest way to get money in this business. Go ahead and talk to somebody who's already done it, who's got
Right.
money.
Right. No,
That's
absolutely. Yeah. Why work so hard to convince somebody when there's people out there that are already doing it? You just have to find them.
well, it's interesting because when I tell people that strategy, particularly for private money, they go, "Oh, but I can't. I'm having problems finding real estate investors that have got money to lend." Well, then I say, then you're talking to the wrong investors because if they don't have excess capital to lend, they're not very good investors.
Right. Right. Yeah, and that's a lesson to learn with a lot of stuff with this business. If you talk with 3 people and then you feel like everybody, like you've talked to a good enough sample, you're way off.
Yeah,
You've got to talk to a lot of people because you're going to find there's the majority of people are probably on the smaller scale, lesser basis in with regards to real estate investing.
hmm
And when you find the ones that are the real deal, you're just the whole opinion of everything changes.
yeah,
They're
absolutely. I think that's one of the biggest issues is you'll get this where, hey, I talked to 6 people regarding private money, or I talk to, you know, five sellers and I haven't gotten a deal, and it's like, no, you don't understand. This is everyone says it's a numbers game, but in implementation, I don't think they know what that means. I mean, it's literally talking to hundreds and hundreds of people until you start to figure out, who's really what does a motivated seller look like,
Right.
or what does a motivated lender, that's one thing I don't hear a lot of people talking about is a motivated lender. I hear a lot of folks talk about, oh, well, there's everybody has the potential to be a private money lender, and I'm like, well, yeah, everybody's got a potential to be a motivated seller, but 99% of those people are never going to lend, and 99% are never going to sell you a house that's going to make sense. So you've got to do some homework in distilling what those people look like. Otherwise, you're going to spend a whole lot of time just meeting with people and not getting anywhere.
Right. And the perfect example of that is, you said at the beginning of this episode, for a period, you were making 15 to 20 offers a week.
Yeah.
Absolutely. That's, I feel like that's something that you should be doing every week. And then when you get better at it and you get better at filtering leads and finding out, like you said, who the real motivated seller is, you don't necessarily have to make as many because you get better at determining where to spend your time. Let's go ahead and go into that private lending. Like, how did you switch from the hard money to private lenders? Like, how did you make that switch?
Well, I'll tell you, one thing I always wanted to do with private money is, find the people that are already lending. And then B, I wanted to show them proof of concept. In other words, hey, I've already done this. So how it worked for me is we had already done a couple of deals, and somebody said, I had met this gentleman at one of these networking events, and he said, hey, I'm a lender. And I'm like, well, that's good because I'm probably a borrower. And he said, well, let's just go for coffee someday. I said, okay, fine. So we went to a Starbucks, like where a whole lot of business gets done at Starbucks. But so sat down and I said, hey, this is what I do, buy and sell houses. I think at the time we'd done 4 or 5 of these things. And I said, here's kind of our resume. Are you interested in lending, or, what are your concerns? And basically within about 10 minutes, he said, okay, you got a deal for me. And I said, well, no, I didn't bring one.
Yeah.
And I think that's a good thing. You don't want to give them some kind of, sales pitch. You just want to see, hey, and really that's how I started the meeting out. I said, hey, maybe we're kind of compatible, or maybe we're not. It's a lot like dating, like, hey, maybe this works for you, or maybe it doesn't, and that's fine. But let's talk about how we work and what we've done. So I think in order to raise private money, you've got to do so through action. In other words, I've done all this stuff already. I've done it with hard money lenders. I'm just looking for better terms. I'm looking for folks that may be easier to work with. Some hard money lenders, can't close as fast as private money lenders. So, that's certainly an advantage. So really, that's how I started. And then from there, we got one private money lender, and his business partner. Shoot, we've probably borrowed somewhere between $5 and $7 million just between the two of them.
Wow.
It's really been quite lucrative just with those two. And then from there, it's, I'll reach out to any of the local RIAs. Hey, do you need anybody to speak this week about doing deals? Do you need anybody to, help sponsor a bus tour? I mean, just getting your name out there to say, hey, we do a lot of deals. And then at that point, it starts to kind of snowball into, hey, I got money to lend, or I've got the self-directed IRA, or I got this IRA from an old company I used to work at, and I'd love to do it in real estate. I flipped two or three houses. How do I get that into a self-directed IRA and, start investing with you guys? So that's really what it is. Just get a couple under your belt with a hard money lender, and then just network your butt off and find those investors that are already investing in real estate who are already lending.
Right. So that's absolutely the key, what you just said. So if you don't have a lot of experience and you're thinking, well, hard money lender, that's going to cost a fortune, this and that. But you don't look at it that way. You're getting your foot in the door, getting a chance to learn, and getting the experience to move on then from after 2, 3, 4 deals or whatever it takes to being able to be someone that a private lender is going to want to work with, to where you're not begging them. You're just showing them, look, this is what I did. This is what I'm going to continue to do. Here's the numbers for the houses that we've done. Do you want to be a part of this? And like you said, within minutes, the real private lenders are going to say, yeah, bring me a deal.
Yeah, I mean, they sit there and look at it and go, geez, this guy's done 4 or 5 of these things in the last 6 months. And the other kind of the other dirty secret in the private money business is that most investors don't have the volume to keep private money investors' money at work all the time.
Hmm.
So as you grow in your business, even if you're only doing 1 or 2 deals a month, you're constantly rolling those dollars into the next deal. And private money lenders, their first concern is this guy not going to lose my money, right? They've worked their entire most of the folks we work with are at or near retirement, with exceptions to some real estate investors. We work with some guys that are 40, 50 years old that are still in the game. They just have self-directed IRAs they want to put to work. But the little secret is is this person going to be able to protect my principal? In other words, are they going to lose my money? Yes or no? And then the second one is the return is really not all that important as much as it is you've got to keep that money at work. And so private money lenders in a lot of cases like to think they're passive investors, and they're really not. So and that has a lot to do with the investors they have working their money. And so one of the promises we were able to make pretty early on was, hey, if you commit, a couple $100,000, we'll probably be able to keep that money at work. And at most there'll be a gap of maybe 2 weeks from one closing to the next. And now this isn't something when you're first starting out you'll be able to do, but when you get a couple of those deals rolling, they'll start to see it, and you'll realize, and you'll be able to have an educated conversation with them to say, hey, you may be getting 12% interest, but your money may be sitting a month in between each one of the deals. And when you really calculate your return, it's somewhere between 8 and 9%. So how about we do this instead? How about you just lend your money to me at 10% and I'll keep it at work all year long? And a lot of private money lenders really latch on to that message. Now you have to have a little bit of a track record and work with them for a while, but really that's what it is. And when you talk about growing, that's the most important part, right? I mean, you get your foot in the door with the hard money lender, so you can go to a private money lender and say, hey, I've already done this, so you get better terms, and then you keep rolling it from deal to deal, and then you can again go back and negotiate those terms for a longer term commitment and a lot less interest.
Right. And so what kind of terms were you looking at in the beginning with the private lenders? Interest rate, points or anything, and then, term, and if there's, any extensions on the loans and all that kind of stuff.
Well, we start out with hard money, which was, I don't know, 3 to 4 points and anywhere between 12 and 14%. Our first private money lender he's very, very active, and he almost has hard money lender rates, and it's 2 points and 12%. So we were able to shave off some points and a point or two in interest. Now we bounce anywhere between 0 points and 8% all the way up to 0 points and 12%. So that's our typical term. And then we've got some bank money that's prime plus 1.25. I think it's like 5.25 or 6%, something like that. It's pretty inexpensive. So yeah, and the way I look at it, and I try to explain this to a lot of investors, it's kind of like when you first start working out, you're sore every single day, and it's an absolutely miserable experience. But as you begin to eat right, work out more, you get more efficient, and that lending is very, very, or borrowing is very similar to that, where you pay the high rates with hard money lenders, and then you get into private money, and then you go from private money into cheaper private money, into bank financing, and then to quite possibly, if you wanted to build your own fund, you just get more efficient at your business, and your money becomes more efficient.
Right, absolutely. Now, what kind of, because most people talk about the points and the interest rate, but let's talk a little bit more in depth about it. So what kind of, because I have some lenders where I don't make any payments until I sell the house, and I just pay all the interest at the end. And then some where I'm just paying interest only monthly on the money borrowed. And everything is always included as far as the purchase price plus repairs, because I'm buying at a certain percentage below market value. How is it for you? Do you find the same thing?
Yeah, absolutely. A lot of times when we started out early on, we were making monthly payments, and then it would depend. If it was going into some guy's checking account, he wanted to see a monthly payment. If it was going into his IRA, we would just defer the interest payment until we closed the deal. And now I've just told private money lenders, I'm like, look, we've got at any one time between 30 and 40 houses that we're either buying, selling, or rehabbing. And granted, we can we can go into QuickBooks and set up a schedule and send out checks and all that. But the problem is let's say we've got, one private money lender that's got three houses. One closes this week, one next week, and one the following week, and then he's funding another deal 2 weeks from now. And so what ends up happening is we may send a payment. He doesn't get the payment before closing, and then we've got a payoff, and then he has to refund, that payment, and it's going into his IRA. And now we've got lenders who are pooling with other lenders to lend on our deals. So then I would have to write a check like to 5 different IRAs. So I've just gotten to the point where I've told the guys, I'm like, look, we're just not making payments anymore. It's too much of a pain in the ass to manage, and really that started pretty early on. So and they'd already done a couple of deals with us, and they just said, yeah, we don't care, just that's fine. So
Yeah.
and they didn't, and to be honest with you, they didn't want to manage it. They really came to us and said, do you really want to send us payments and all this stuff? And I said, to be honest with you, no.
It just makes it easy for everybody, right?
Yeah, I mean, imagine I've got these couple of guys that have pulled some dollars together, and it would be like one guy's checking account, and then the other guy's IRA, and then the second deal would be like both of the guys' IRAs, one of the guys' checking accounts, and his wife's IRA, and so and then
Yeah.
I'd have to send them, one group of private money lenders, I'd have to send them like 10 checks, a month for 3 deals.
Yeah.
And they just got tired of doing when you start to look at it, you just start tired of doing the math. And then when you have to do the payoff at the end, and hey, did you get all the interest for the month? And then you got to prorate it. And it was like, okay, this just doesn't make any sense. We're making this a lot harder than we needed to. So now what we do is just, we agree on a rate, and they agree on, the numbers. Obviously, the numbers still have to work. In other words, how much you buy it for, the rehab and the ARV. And that's what we put in for the loan, and that kind of takes care of itself. With regards to repair estimates or repair costs, all those are included. All that stuff's included in the loan in most cases. If we've got a little deal, and we've been doing a lot of these lately, where the rehab is under 15,000 bucks, we don't even ask for the rehab anymore. We just say, hey, look, just buy the thing, and we'll rehab it and put it back on the market, and they're fine with that. Most of the time, what we do is, let's say the rehab is under about 50,000 bucks. We'll do one draw, so they don't have any more than the construction into the loan. So let's say we're doing a house, $200,000 house needs $50,000 rehab. We'll do the $50,000 rehab, and by the time I get around to sending them an email for the construction draw, it's usually already listed. So I'll just fire them listing, say, hey guys, we'd like to make that $50,000 construction draw in one draw. By the way, here's pictures of the house. You guys are welcome to go buy the house, take a look at it. Houses above 50 grand or $50,000 rehab, typically we'll do 2 draws. Halfway through somewhere, say it's $100,000 rehab, we'll do a $50,000 draw, send them a note, say, hey, we're halfway through. Here's some pictures. In fact, some of the lenders don't even want pictures anymore because they don't like it clogging up their email.
Yeah.
They'll just say, hey, just let me know how much you want and when you want it. So, okay, fine. And that's just, you build that, for new investors, that sounds crazy. But as you start to work with these private money lenders, they're trying to reduce the amount of work they actually want to do for the most amount of return. So a lot of times I'm just sending them an email and say, hey, we're taking a $50,000 draw on this. Here's our wiring instructions. Send it over whenever you get a chance. So.
Yeah. Yeah, it's really awesome. It's nice when you get to that point, and it doesn't honestly take that long. Some people listening might think, well, yeah, they've done it for years and they had to build up to that, and it just depends on the lender really, because some private lenders, especially if they're just doing some of the retirement money lending, they can be real comfortable with getting comfortable with after 2 deals with you to where they don't really want to know anything. They just want to, obviously you've got to be on the up and up and be a good person, and not take advantage of anybody. And, people will be willing to do that with you. I mean, it just makes it so easy when you can do that with all the parts of your business and get all these things where you don't have this back and forth for everything, so that you can focus on just getting more deals.
Well, I think that, you're right. It doesn't take 100 deals to get to that state. You're talking 2 or 3 deals. And if they begin to realize that you're a professional operator, they look at it just like lending. they're not calling, look at it this way. They're not calling, the mutual fund that pays a dividend every quarter, hey, where's my dividend payment? I mean, nobody does that, right? So what they're trying to figure out in those first couple of deals is, hey, is this a reputable operator that's not going to lose my money? In fact, are they going to make me money with the least amount of drama as possible? So I mean, and it literally only takes two or three deals to get to that point where it's a machine. In fact, they start calling you. I've got a new private money lender we brought on board, I don't know, a month or so ago, and we're closing to sell that first deal, I think next week. And he's already calling me. He's like, hey, I'm ready to do some more. I mean, he goes, I just want to churn and burn this thing. So, and in fact, what he's doing, he's getting a couple of his buddies from work, and they're all putting together a little LLC and pooling all of it, and then lending it to us. So, for them, I mean, they get it. I mean,
Yeah.
if you're really operating like a professional operator, that's one of the things that's kind of interesting is when you talk to people about, hey, I've talked to this person, or I'll even refer private money lenders out. If somebody says, hey, I got a deal that I need to fund, I'll send that information over to one of our private money lenders, and then our private money lender will contact them and set up a meeting if they want to invest in one of their deals. And I've heard investors that I've done that with will call me and say, hey, he wasn't really interested in the deal, and kind of gave a little presentation. And, then I talked to the private money lender, and he said, and they basically say, yeah, I'm not sure if they really know what they're doing from an operational standpoint. Not that,
Hmm.
not that what you're doing as far as rehab. You hire subcontract. It's like managing any project, right? But they get this feeling like they're not a professional business owner or operator. And that doesn't necessarily mean that if you're new, you're not professional and a good operator. I mean, if you're somebody who's been in corporate America, it's been a great project manager for years. I mean, you can do this business, not that hard. But there's something there that they have some trepidation about. So, yeah, you don't have to spend years and years doing this to where you build up a cache, if you will, of private money lenders that are just, ready to start lending to you. It really is. I mean, it is a people business, but they can tell if you're a professional operator or not.
Right. And you just need to be anyway. You need to run a business like it's a business.
Hmm.
If you're sold on this business because you think that you can do it sitting at home in your underwear all the time, uh, it's not
Yeah, good
realistic.
luck with
Like,
that.
yeah, maybe eventually you build up to that after 10 years or something. But I mean, you're definitely not just going to get into it and be that way.
I'll,
It's going to be work.
I'll,
So,
I'll tell you what, all the guys that I know that are, some of them have net worths in the hundreds of millions of dollars. In fact, the guy that I'm in my office right now, and the guy that owns our building, we're getting to know pretty well. He owns 6,000 units down here, and he owns this building and a bunch of other stuff. And, I don't see him in his undies at home hanging out.
right.
He's up here working just like everybody else.
That's right. We've got a whole lot of awesome information in this episode already, and the one thing I still want to touch on though that people need to be aware of is if you are reaching out for private money, there's some SEC guidelines that you have to follow. And are you aware of any of those that we could talk about? Stuff to just be careful of.
Yeah, you know what I do? I have always worked with folks who would be considered accredited investors. These are not, and there's a couple of reasons I do that. And I haven't been so concerned with the SEC issue as well. Let me back up. The only times I've ever seen the SEC get involved in real estate stuff is when people start losing money. I know they came down on one of the real estate clubs here in Houston, and and with regards to how they were raising private money. I think you have to be really careful on the solicitation side.
Right.
If you're standing, I see it on Facebook all the time where somebody will put up, hey, we need money for this deal at, 12% interest, and here's all the numbers. And I don't know, I'm not an expert, I'm not an SEC attorney, but I don't know if that's legal.
Yeah, I don't think it is. I don't think you can talk specifics when you're reaching out to a general audience.
Yeah, I don't think you
Right.
can either. A lot of times, what happens with us is we talk about doing deals, and private money lenders approach us.
Right.
And these are private money lenders that have net worths in the millions, tens of millions in a lot of cases. So we're not dealing with, ma and pa who've got a net worth of 200,000 bucks, and we're trying to borrow $50,000. And that's not to disparage that in any way, but the person who has a lower net worth, if you will, is typically less sophisticated. In fact, our private money lenders, when we were just getting into this business, were way more sophisticated in this business than we were. And they knew that going into, I mean, it's not, that's, there was no hiding that fact, right? I
Right.
mean, a couple of these private money lenders have been in real estate for 25 years. So, um, those are the people that we typically work with. And you will find, and there are those guys and gals in every single market across the country. So don't think that if you're in some small market, there's not somebody who's got a significant net worth that's not investing in real estate. So I think that's typically how we avoid some of the SEC entanglements. I'm not out there saying, well, how much money do you have? And, this is the other thing too is we don't tell people what we quote pay for money. So we'll have private money lenders that, after a series of time where we're developing a relationship with them, they'll say, hey, what kind of interest do you pay? And I said, I don't know. What do you want? And then they always kind of smile and they say, well, I want 5 points and 20%. I said, well, I've got this Excel spreadsheet I keep in my office, and I'll put you on the spreadsheet. But,
Right.
what we do is we start with the lowest money first, and then we kind of move on up that list. So there may be a deal in the future that 5 points and 20% makes sense. But, your money might not be in work
Right.
for a long
Right.
time. So then they say, okay, I got it, makes sense. So, then the question is, well, at what point is my money competitive? And I can say, well, this is what we see in the market. In the market, I see, some folks paying 8%, some paying 12, and then a lot of times they'll ask the question, do you pay points? And typically I'll say, this is my favorite response. The last guy I tried this on, I absolutely loved it. I said, well, do you like sleeping at night?
Yeah.
He said, well, yeah. What do you mean? I said, do you have to worry? Do you ever worry if I've got your money to work that you're not going to get paid back? You're not going to make a return? They go, absolutely not. And I go, okay, we don't pay points. And he goes, I see. I said, yeah. I said, there's probably somebody out there, another investor that will pay 5 points and 20% for your money. But the reality is the investor that is paying that much more than hard money, they don't have any other options, and there's a reason for that.
Right.
So,
Absolutely.
the discussion we always have is, look, I like to talk just about interest rates because unless you've got tens of millions of dollars, we can probably keep that money to work damn near year round. So it makes their return look a lot better when you don't have to pay points, but that money's always at work. So that's typically a conversation we have with them, and I think that avoids a lot of the SEC entanglements one can have.
Right. Yeah. And like you mentioned, it's usually dealing with solicitation. And as we mentioned further back in the episode, as far as finding people that are doing the lending already, it's not like you're finding somebody that's never done this and convincing them to lend money on your deal. You're finding people that have already done this before. So, and then like you said, at the RIA meetings, the Real Estate Investor Association meetings, finding out who's doing some lending, taking them to coffee, talking to them, and telling them about deals you're doing, and then they're going to say, hey, I'd like to lend on one or something like that. I mean, it's very simple.
Yeah, and I can't encourage your listeners enough to do those first couple of deals with a hard money lender. That way, when you're sitting down with some potential private money lender that's already done some investing in real estate, it's not a discussion on, well, this might work, or maybe because better probably than just about anybody that there are so many people that never get off home plate or even step up to the plate to swing in this business. And when those folks self-identify themselves as private money lenders, they have a flock of people that come to them. Let's say if they say at a meeting, hey, I'm a private money lender, there'll be 30 people stand there next to them wanting to talk to them. But the reality is 29 of those people are never going to do a deal in their life. So
Mm-hmm.
when you reach out to contact one of those private money lenders that you meet at a RIA meeting, or you trade business cards and they say, hey, I'm a lender, and you can say, hey, I've already done 4 or 5, 6 deals, or maybe it's 2 or 3 deals, and would you be interested in possibly doing some lending with us? And, oh yeah, okay, well, let's go to coffee or chat somewhere else. And so I think that proof of concept or show that you've actually done something in the past is so incredibly powerful in this industry.
Oh yeah, absolutely. What Melissa, my wife, and I did when we were cranking up and getting some new private lenders is we put together And we hadn't even done like too many deals at that point, but we had put together sort of like a booklet. You know, it had maybe 5 deals with pictures of the house before and after, numbers for the deals. And man, what that shows people, because if you're just sitting across from them telling them numbers, a lot of that's just coming in one ear, out the other.
Mm-hmm.
But when they've got pictures with houses, with addresses and stuff like that, of deals that you've already done, like showing that you know what you're doing, that just goes so far with them.
Oh yeah, one of the things that we do is when we've got new private money lenders is they always ask, and it's the same question, like, so can you like send me some stuff? Well, what stuff do you want? And we've got
Stuff.
a private lender packet, but I always love asking the question. Well, can you like send us some stuff like what the docs look like? And what's so fascinating is when you start having that discussion, they've already said yes.
Mm-hmm.
At this point, they're just trying to figure out, okay, well, what does this thing look like, and how much work, what's going to be required from me, and that sort of thing. So we actually have a Google Drive account set up just for new private money lenders. And we just send them hey, this is all the documents. Here's some samples, like you had said, of houses that we've done in the past. And then we have a Google Drive account that has all of our HUDs in it. So we just send them all the HUDs and say, hey, here's all the buy and the sell. And in some cases, we will give them referrals to other private money lenders that we've worked with, which is pretty powerful. So yeah, I think showing them all that stuff, and then they get overwhelmed with all this information. What's fascinating about that approach, and what I love about that approach, is it really gets to the heart of, are you really interested in lending and not, or not? It could be maybe they just don't like your personality or something, or they just really don't want to lend for some reason, if that's someone who hasn't done any lending in the past. So
Right.
it's an interesting way to really set expectations early on. Like, hey, I'm an investor. I do this all the time. Here's the pictures. I mean, here's what we do. Interested or not. And you almost, I don't want to say you're not necessarily selling, but you're really having a discussion on, are you ready to do this or not? Because we are.
Yeah, but what's so awesome about that too is like how many other investors that approach them, like you said with the example at the RIA meeting, 30 investors run up, and one of them's probably really worth looking at to do lending on. And with everything that you just said with the Google Drive and everything, it's very professional. And how many even experienced other investors have that they show these lenders?
Mm-hmm. Yeah, and I would imagine it's a pretty small group.
Oh, yeah. Well, awesome. Jason, you've shared a ton of great information with everybody about getting funding for deals. And I know a lot of people are sitting on the sidelines. I've learned a lot about getting started in real estate investing, flipping houses, but haven't done anything because they're asking themselves, where am I going to get money to be able to buy these houses and do this? And I think you've shared pretty much the roadmap and how to do it. And like you said before, it takes action. It takes getting out there and talking to enough people and doing enough marketing, making enough offers to get leads, to get deals, and go from there.
Yeah, money shouldn't be any reason the deal doesn't close. I mean, I know the old saying, hey, if you find the deal, the money's there. I mean, you still got to work to find that money, but man, just start networking. There's plenty of money in your local RIAs from other investors who are already investing. There shouldn't be any reason you got to go out and find it.
Yeah, absolutely. Hey, is there a place that people can find you that are listening?
Yeah, probably Facebook is the best place right now. If you just search for Jason Bible, last name spelled Bible, in Houston, Texas. I do a lot of stuff, if you will, on Facebook. I've spoken at a lot of conferences. I just got back from speaking at the National Fortune Builders Conference about a month ago, and I started a series on Facebook called 12 Weeks to Awesome. You spell it out, 12 Weeks to Awesome, all one word, and it's a group of a few hundred of us. I think we might have hit 200. We only started the group about a week ago, I'm just doing videos and some commentary on how to start in real estate. In other words, if you spent 12 weeks really just getting after it to start a business, this would set you up to start doing a deal or two in the next few months. So yeah, find me on Facebook. That's the best place to interact with me. And then if you're interested in starting in real estate, 12 Weeks to Awesome's a great place to do it.
Great. Cool. Well, thanks again for being on the show.
Great. Well, thanks so much for your time.
Thank you so much for listening to the podcast. I hope you enjoyed this episode. We've got a lot more great stuff coming up, so be sure to subscribe in iTunes. And if you would, please leave a rating and review for the show. I'd really appreciate it. And got a lot of good stuff planned for you. And be sure to go to the show notes page at flippingjunkie.com/15. That's 15. flippingjunkie.com/15 to get the guide for finding and approaching private money lenders, as well as the other key points from the show on the show notes page. All right, well, thank you very much, and we'll see you next week.